Today's edition of Creative Financing Solutions, I bring you bridge loans. Here's how they work and what problems they solve. Let's say you want to sell your home and buy a new home, but you don't want to put your house up for sale quite yet until you've found that new home because you don't want to be homeless in the meantime. Totally understandable, but let's break this down. First, do you even qualify from a debt-to-income ratio standpoint to buy that second home while you're still paying mortgage payments on your existing home? That's 2 mortgage payments each month. If not, you may need to sell first to eliminate that payment so you have room to absorb the new payment. Even if it'll only be a couple months where they overlap, where you're paying both payments, in order to qualify, you have to be able to show you can cover both homes in full. Okay, let's say you do have sufficient income to cover both payments. The next question is, where's the down payment coming from? Proceeds from the current home sale? Well, it hasn't sold yet, so the money isn't in your account yet to spend. So now you're stuck with the chicken and egg conundrum. Which do you do first? Sell or buy? One option is to do what's called a contingent offer. That's where you tell a seller, hey, I like your house, I want to buy it. And the seller says, sure, I'll sell it to you at that price and terms you're offering. How quick can you close? And you tell the seller, well, let me first sell my current house, and then once that sells and closes, then I'll close on yours 3 days later. That seller may not want to wait for you to sell your house. In fact, even if they agree to sell it to you, and as they're waiting for your home to sell, a different buyer can come along and offer to buy their home without making them wait. That seller can then give you a bump notice, basically saying you're out of the picture, and these new guys are going to buy instead. This is where a bridge loan comes in handy, as it solves multiple hurdles. Conceptually, what you do is a cash-out refinance loan on your existing house so you can access those proceeds. Now, typically, a refi would, of course, have a monthly payment to pay back the loan, but the bridge loan investor would give you a 12-month balloon note to pay them back, which means you have up to 12 months to sell your house and no monthly payments due on your existing home during those 12 months. However, interest is accruing each month. Now, simultaneously, you would qualify with that same investor to purchase the new home, as now you have a bunch of proceeds to utilize as a down payment on the new one. But you don't have 2 monthly mortgage payments to calculate as part of your overall debt-to-income ratio. So it solves both of those financing hurdles. You get your down payment, and you don't have 2 monthly payments. Okay? Now, the third advantage is you no longer have to present a contingent offer to a seller, as you can buy their home as if your home has already sold, even though really it hasn't yet. So what's the catch? There's 2 sides to every story, and there's advantages and disadvantages to every approach. Well, I just listed the 3 major advantages that it does solve, so let's talk about some disadvantages. First, it's inherently more risky to the investor because your home hasn't sold yet, right? And this is what's called a non-conforming loan, so it can't be insured by the government like a standard conventional loan could. Because of these risk factors, the interest rate will always be a couple points higher than whatever the going market rate currently is. On top of that, you have additional closing costs, right? You have closing costs on the refi and on the purchase, okay? But remember, this is all temporary financing by design. So let's say after you moved in and your old house is sold on your own schedule, you've made at least 6 payments on the new one, you can contact us back and inquire about a potential refinance to lower your rate. As always, I want to remind you that these creative financing options are not the best fit for everyone. Okay, but would love to chat more about the pros and cons and how they might work for you. Let me know how I can help get you into your next home, even if another bank or lender said you can't, as there might be creative financing options for you. Chat soon. Cheers.